Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 24th, 2026, and we're diving into Scotiabank's first quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Scotiabank has kicked off 2026 with a strong performance, and I'm excited to break down the details with you.
Revenue and profitability overview. Let's start with the top line. Scotiabank reported a net income of $2,299 million for the first quarter of 2026, a significant increase from $993 million in the same period last year. John, what are the key drivers behind this growth?
The growth in net income is primarily due to the absence of last year's impairment loss related to the sale of operations in Colombia, Costa Rica, and Panama. On an adjusted basis, net income rose to $2,695 million, reflecting strong performance across all business lines. Total revenue also increased to $9,646 million, driven by higher net interest and non-interest income.
And how did this impact their earnings per share?
Adjusted EPS came in at 2.5, up from 1.76 last year, showcasing a robust 16% growth. This is a testament to Scotiabank's effective cost management and revenue growth strategies.
Segment performance and strategic initiatives. John, can you walk us through the performance of Scotiabank's different segments?
Absolutely. Canadian Banking reported earnings of $960 million, a 5% increase year over year, driven by strong revenue growth and disciplined expense management. International Banking saw a 7% rise in earnings to $737 million, benefiting from margin expansion and positive operating leverage. Global Wealth Management delivered an impressive 18% increase in earnings to $491 million, thanks to higher mutual fund fees and brokerage revenues. Lastly, Global Banking and Markets achieved a 5% growth in earnings to $544 million, supported by strong fee-based revenue growth.
It seems like Scotiabank is executing well across the board. What strategic initiatives are they focusing on?
Scotiabank is focusing on margin expansion, fee income growth, and positive operating leverage. They are also committed to delivering a return on equity above 14% by 2027, 1 year ahead of their Investor Day commitments.
Credit risk and capital ratios. Let's shift our focus to credit risk and capital ratios. How did Scotiabank perform in these areas?
The provision for credit losses was $1,176 million, slightly up from $1,162 million last year. The Common Equity Tier 1 capital ratio improved to 13.3%, reflecting strong capital management. The total allowance for credit losses decreased to $7,185 million, primarily due to divestitures. The leverage ratio stood at 4.4%, indicating a solid capital position.
What does this mean for Scotiabank's risk management strategy?
Scotiabank is effectively managing its credit risk, with a focus on maintaining strong capital ratios. This positions them well to absorb potential losses and continue supporting business growth.
CEO's perspective and future outlook. John, what insights did we get from the CEO, Scott Thomson, regarding Scotiabank's future outlook?
Scott Thomson expressed confidence in Scotiabank's strong start to 2026, highlighting the 16% growth in adjusted EPS and a 13% adjusted return on equity. He emphasized the bank's commitment to achieving a return on equity above 14% by 2027, driven by earnings growth across all business lines and positive operating leverage of 4%.
It sounds like Scotiabank is on a solid path forward. Any final thoughts on their strategic direction?
Scotiabank's focus on margin expansion, fee income growth, and disciplined expense management positions them well for future success. Their strategic initiatives are aligned with delivering sustainable growth and shareholder value.